Hello, everybody, and welcome back to another Tuesday tip. And I'm here with my colleagues, Rachel Stedman, who co-hosts me on Friday as well as our colleague Karen Perez, who some of you may know from our amazing initial consultations and all the amazing services and help that they provide throughout the year. In fact, I'm here today just for a short bit to do a bit of an introduction. And I'm going to turn it over to them because they are truly our experts when it comes to making incorporation easy and how to avoid the common pitfalls associated with incorporating your business. So Karen is our paralegal specialist, and she helps with the whole incorporation process. And Rachel is our customer experience manager, who's here to make your experience as enjoyable as possible. As you guys probably know, my name is Andrew Wall. I'm the managing partner here at CPA 4IT, and our firm specializes in helping service-based professionals organize their finances, create wealth, and transform wealth into a legacy. We've been doing this since my father founded the firm in 1984, where we initially specialized specifically in IT consultants, and branched on to doctors and realtors to now help other service-based professionals again, organize their finances, create wealth, and transform wealth into a legacy. We've been very fortunate to have been recognized for all the things that we do to help you guys as a top 50 cloud accountant, top 100 pro advisor, platinum pro advisor with QuickBooks, and the list goes on for all our accolades. But without further ado, I do want to turn it over to my lovely co-hosts for today, or actually the hosts of today's session. Rachel and Karen, who are going to be talking to you about how to make incorporation easy so that you guys can leverage the benefits of this amazing corporate structure that we've got available here in Canada.
Thank you so very much, Andrew. Greatly appreciate it. And Karen, it's a very pleasure to have you join us today. So Karen is our corporate paralegal here at CPA 4IT. So we're really going to be picking her brain a little bit just to, really provide, these deep dive into some of the top 10 common pitfalls individuals find themselves experiencing when they decide to set up a small business. So we're just going to start off from go through the different pitfalls, and then we'll dive into each individually. So one of the first things that we typically find, when individuals are first starting off a small business is that they typically have that difficulty in selecting the wrong business structure for their corporation. So I think that's, our paramount pitfalls that we've seen throughout the years. Okay. We'll also be diving into the differences between incorporating federally versus provincially, some of the pros and the cons. And of course, the opt-in for a numbered company over a named company, we will dive into why it is so important that you are selecting a name for your business. Okay. We're also going to talk about, when individuals decide to include their spouse as a director. So we're going to demyth a lot of the, myths of people think that there is this benefit of having your spouse as a director. So we're going to, correct that. And then we're also going to talk about choosing the wrong share structure, which Karen knows all too familiar, and she's going to dive into that as well. And of course, some of the other mistakes that individuals, will come to is failing to prepare their initial minutes and the corporate minutes. And of course, selecting the incorrect fiscal year end for the business. Incorporating, as I like to call it, the DIY, not using professional service, professional advice in setting up a corporation. And, the all too familiar impatience with the incorporation process that some individuals experience. And lastly, we're also going to touch upon neglecting the ongoing corporate maintenance of the business. So these are the top 10 topics that we're going to touch upon today. So just, starting from the top, we're going to dive into the selecting of the wrong business structure. So there's a lot to consider when starting a small business. One of the first decisions is, you need to make is the type of business structure that you actually need. In Canada, your business can operate as a sole proprietorship, a partnership, a corporation, okay? And there are pros and cons to each option, but there is very important differences in terms of the different options, such as startup cost, liability, tax rates, tax planning. So there's a lot to consider when you're making that decision, and understanding the key differences between the different options is really important to ensure your small business starts off on the right foot. So Karen, let's dive in. Can you give us some details of the main differences in each of the different business structures?
Yes, thank you, Rachel. So as you have mentioned, we work normally with three different types of structures, right? One is the sole proprietorship. And one of the main advantages of the sole proprietorship is that it's actually pretty cheap to set up. You can either do that with a corporate paralegal at our firm, like yourself or myself, or you can also do that online. So it's pretty cheap to actually set up a sole proprietorship. You are able to claim expenses that you're incurring in order to generate income, and you can also do income split with your spouse. However, as the sole proprietorship comes with these little advantages, there are other disadvantages that I consider people should be aware of. One of the main things is unlimited liability. Another one is that any money that you make, if you make $300,000, if you make $100,000, it doesn't really matter. It all goes subject to the personal tax rate. You cannot leave any money behind. If you make $300,000, but you only spend $100,000, well, that's too bad. Unfortunately, all the money goes into your personal tax return, and you must have a December 31st fiscal year end. The same thing happened with the partnership, Rachel, except there is an extra disadvantage, which is that either partner can bind on the other, right? So it's one of the, corporate structures, or one of the business structures that I will say not to choose. I will a million times prefer to go as a sole proprietorship versus a partnership. And then we obviously have the corporation. And the corporation, yes, there are a couple of disadvantages, which is that it's a bit more expensive to set up, right? Paying an accountant, paying a lawyer, or paying a paralegal for it can be more expensive than paying for a sole proprietorship. And obviously, there is like maintenance for the corporation, such as filing your corporate tax returns. But the tax advantages with the corporation are significantly high compared to the other two. For example, you can leave money in the corporation and only takes advantage of that small tax percentage. In Ontario, at least, is 12.2%. There's always limited liability, and there is no EI premiums if you don't wish to contribute to it. So in general, I will say that the corporation is by far the best corporate structure for a person. Again, you must be aware, and some clients may not, but how we work at CPA for IT is clients normally come for a consultation, right? Yeah. And we try to assess your personal situation to make sure that we are providing you the right advice and the right structure for your business.
Yeah, and definitely, Karen, that is so important to really identify the pros and the cons, because I think a lot of people, when they're first deciding to set up a corporation, or I should say to set up a business, even if the corporate structure might be the best option for them, they tend to be very concerned about the upfront costs. But they fail to realize that there are so many significant advantages that a corporation provides for you. And again, as you've emphasized, the reduced tax rate of 12.2% on the first 500,000. So it's like, I tell clients, do you prefer to be paying, 12.2 on money you leave in your corporation, or do you want to be subjected to the 53.3%, which is the highest tax bracket? Right. So, try not to think so small in terms of, okay, it's costing me a couple of $100s to set up, but the tax savings well outweigh and can be in the several hundreds of thousands of dollars from a long-term perspective when you're looking at being an established business owner. Okay, perfect. So thank you very much for, a little bit of information on there. So then we're going to touch up next, where we're going to discuss a little bit in terms of the differences between incorporating federally or provincially, which again, that is always a very, a very important factor that individuals don't realize, that there is a bit of a difference that you want to take into consideration. And again, some people always think of it from a cost perspective. So most individuals don't understand the implications of the different jurisdictions. Therefore, they make the decisions without considering all the factors impacting their business, which is really key. Okay, for example, incorporating federally may be a little bit cheaper in the short term, but can be more expensive in the long term. So it is important to choose the appropriate jurisdiction based on your business's geographic location to optimize cost and regulatory compliance. So Karen, let's go a little bit more in terms of those breakdown of those differences between the two.
Absolutely. So I wish I could tell you the times of how many times people will come and ask me, should I incorporate provincially or should I do it federally? I hear federally is the best option. It depends. I always tell my clients, it depends. Federal incorporations, yes, they are a bit cheaper upfront, right? But what clients do not realize, or what individuals do not realize, is that even though the incorporation federally may be $200 plus your name search, I don't know, let's say $40, right? That federal corporation requires to be extra provincially registered in a province, right? You cannot have a federal corporation and just operate in a province without registering in the province first. Now, Ontario is the only province in Canada that does not charge for the extra provincial registration of a federal company. However, there will be some admin cost for someone to file that extra provincial registration, even here in Ontario, and there definitely will be a government cost associated to register your federal corporation in another province. The prices may vary. They can go from like $500 to up to $1,000. Some of those provinces may actually have to ask you to renew. And so that's one of the main things that I normally will mention during the federal incorporation, registration versus the provincial. One other thing is the name. So, but we're going to be talking a bit, I know that we're going to be talking a bit about the name in one of the other points. So I still want to mention that the name is also another option here that, you can either choose for a federal or a provincial, but the federal name may take us a bit longer. So one of the other things that I also would like to, people to know is that both either federal or provincial, both corporations require to file an annual return. Now, for a federal corporation, the annual return does have a government cost, plus also an admin cost if you're filing these with a service provider, as most times the service provider required to use a platform to file that annual return. And the provincial return in Ontario, you can file that with a service provider. There will be a fee, but you can also open a one key account with Ontario Business Registry, and you can file this annual return for free. So both of them require a return. Now, one of the other main things I would like to mention is that, so for example, for a federal jurisdiction or a federal incorporated company, if you don't file 2 of those annual returns, they may involuntarily dissolve your corporation. They send you notices to file those annual returns, but once you don't respond to those notices and do not file those annual returns, they will involuntarily dissolve your company for non-compliance, and then you will require to revive that corporation, which can be very expensive. And I can tell you right now, as I just completed a couple for a couple of clients too, that it can be really a very long process, right?
Yeah, these are definitely important things that I think a lot of people don't realize, they don't know. So it is really good that we're really able to educate as many individuals. Another thing that's very important, another factor when determining whether you're federally or provincially incorporated, is also your residency status. And again, this is something that the average person may not necessarily know, because if you are a permanent resident or if you're an individual here in Canada on an open work permit, although both individuals are able to establish a corporation, you are only limited to specific jurisdictions for a non-resident, an individual on a work permit. So again, that's why speaking to a professional, it's very important so that we can, again, as Karen, you've mentioned, have the initial consultation, have an idea of what their situation is so that we can ensure that they are selecting the best option that works for them.
Absolutely, you're so right. Thanks for mentioning that. Almost forgot it.
Yes, that one is really key for a lot of small business owners. Okay, so then the
Absolutely.
next one we're going to talk about, of course, is the opt-in for the numbered company over a named company. Now, this is where I always say, I think this is, maybe the most difficult thing for an individual because, it's like naming your baby. It's your company, right? You got to think of what name that you want to select for the business. So this is really important. And I know some people think, hey, opt-in for a numbered company might seem like a shortcut to help you in terms of saving time in the process of the incorporation. However, it overlooks the importance of creating a very unique identity for your business. Okay. More importantly, making changes to a numbered company in the future can be more costly and complex because this requires articles of amendment, my apologies, and as well, it's quite a significant amount of government cost. So it is generally advisable to register your corporation with a name that aligns with your business identity. It makes it easy for customers to identify and connect with your brand. So Karen, what are the main mistakes that people don't take into consideration when they decide to opt for a numbered company?
I mean, people should really consider one of the main things, which is risk or increasing risk for personal service business or personal service corporation, right? At the firm, we have noticed that the corporations that the Canada Revenue Agency tends to review or audit are most times numbered corporations, right?
Yep.
So why not spending the extra money, like extra $30, $40, whatever the name search will be, and the name in your company, right? As you mentioned, is also a unique name that you're giving to your business. So that is like one of the main things for me, like that's the one that concerns me the most. Another thing that I should mention is that, I mean, a name search only takes 30 minutes in Ontario, max. The name search should take you a max of half an hour. However, if you're doing that federally, it may take you an extra 2 or 3 days if you're looking to pre-approve your name, right? So it's really up to you what you wish to do. We will always, have clients deciding for a name corporation versus a number corporation. We just find it's a better way to set up your business.
Very important. Yeah, Karen. I mean, I've seen so many individuals that I ask, why did you decide a numbered company? And they just said, oh, I wanted to save some time on the incorporation. And it's like, it's only 30 minutes. And again, it's like you said, even the cost for the new ones, I mean, you're looking at approximately a $45 cost from the onset. And even if individuals decide, you know what, I'll just add the name down the road. Well, now it's not just that $45, as I said earlier. Now it's also that article of amendments. So now you're in the hundreds of dollars. So again, trying to skip through this process, thinking that you're expediting it quicker. So, that's definitely not the best option that we advise for individuals.
Right.
So,
I mean, to be honest, and I was going to mention, Rachel, sorry, numbered companies may be okay for a holding corporation. And even that, for a holding corporation, I will still insist to a client to have the word holding, right? It's just easy. It's just it avoids creating confusion in the future if you wish to file corporate taxes, which corporation is which. It's just better to just pay the extra tiny bit for the nuance search and then just move forward with a named corporation.
100%. And, I always joke with clients sometimes, and I said, when last have you dealt with someone that's, 123 Ontario Inc., right? Someone has a business, you're establishing your business, a brand, et cetera. You want to have that name that you can identify too.
Absolutely.
So we're hoping that, from now on, we're going to see less and less individuals coming through with numbered company options. Actually, in fact, just to add to that, Karen, I mean, with the many years that I know you've been doing incorporation, and I've also been doing consultation, I would say of my many, many years here, I mean, I can maybe count on one hand how many numbered companies we've set up. Even if a client comes and says, I want to do a numbered company, we know too much of the risks associated to that this is not something that we typically engage with. And as well, even with individuals working sometimes with recruitment firms or agencies, staffing agencies, because they're aware of personal service corporation risk and et cetera. I have actually heard as well, sometimes some companies, they don't want to work with individuals that are numbered companies. So, there are a lot of different factors to take into consideration of that as well.
Absolutely.
So, moving on to the next point. So the next point we have that we're going to be touching up on is, of course, choosing the wrong share structure. Karen, I know we have a lot to discuss on this one, okay? I would like to say the number of clients that do their DIY incorporation and come to us, it's always a high percentage of these clients that we have to be amending their corporation because of how poorly structured that corporation is. So, accepting the default structure, as I like to call it, people are setting up a company like they're installing software and they just hit next, not knowing what it means, right? So accepting that default structure while incorporating your business can lead to losing out on a lot of tax strategies that would be available to a properly structured company. So to circumvent this pitfall, it is advisable to opt for a share structure customized to your business's long-term financial and operational objectives. This approach allows for greater strategic planning, and specifically when it comes to taxation. So, Karen, what are some of those pitfalls that you see with the wrong corporate structure?
I mean, to be honest, this is just a really I think that we can spend like the rest of the webinar talking about this. So I want to try to make it very short. And I will tell you what is one of the main things that I at least feel like it's a risk. It bothers me. It just makes me feel like, oh, why did I spend all this money in the incorporation? And that would be definitely the limited tax advantages, right?
Yeah.
If you're incorporating a business and in the next couple of years, you're planning to have a $1 million company, right? And then you're looking to do a holding corporation in the future. If you have the wrong share structure, unfortunately, you're going to have to spend thousands of dollars to fix the first company. Why? Because not enough shares were provided in the certificate of incorporation or articles of incorporation that you may require a lawyer's opinion. You may require to have an amendment filed with either Ontario or with the federal jurisdiction. And in general, you're just spending twice as much money that you could have paid right at the beginning if you would have done that with a professional. As you have mentioned, it's pretty easy to incorporate right now. You just pay your $300, next, and then you realize the limited share structure you have is not going to allow you to grow in the future, right?
Yeah.
So unfortunately, your corporation may not be able to function that way. So yes, I mean, I'm not sure what else I can add here. You require a professional to assist you, or at least to guide you with a consultation to inform you if this share structure will be right or not. You also need to consider that if you have family members in the future, and those family members are actually actively working for the company, you could take, a bit of like tax advantages here. So again, my suggestion here is to always try to do this with a person that knows what they're doing, with a professional that can guide you to incorporate.
Indeed. And yes, Karen, many times I've seen individuals come in, they've set up their incorporation and they say, hi, I have come so that you can help me structure my company. And I like to say, well, you do the structuring before you establish the company, because all of that needs to be included in, right? Yes, can we make, modifications to your shares in the business? Yes, but then that's restructuring your existing shares of the business. And again, there comes the article of amendments and the additional cost. So, knowing all of these different pitfalls is really geared to help you so that you're not making these mistakes that are really going to cost you financially down the road. So it is really important to know these things. So, now we're leading from, having the proper share structure. And as you said, Karen, we can do some of that income splitting by having family members as shareholders. Now, one of the, misconceptions we're looking to demyth here is that a lot of individuals think, okay, so if I want to pay my spouse, my family, my et cetera from the corporation, my spouse must be a director of the corporation, which is incorrect. You can still have the advantage of being able to have your family members as shareholders and do that income splitting without necessarily having them as a director. So a lot of business owners think that it's a great idea to include their spouse as a director of the corporation. And however, this step comes with several implications, including, with your spouse as a director, it can also create some unnecessary responsibility and some unnecessary risk for your spouse. So let's dive a little bit more into those misconceptions, Karen.
Yes, I mean,
what do they need to take into consideration?
It's a terrible idea to add your spouse as a director of the corporation. you're just creating unnecessary risk and liability for your spouse, right? The point here is to minimize liability, and
Right.
your spouse is not doing that at all, right?
Mhm.
So as you mentioned, a lot of people have this idea that, okay, well, I'm adding my spouse as a director because my spouse is working for me. It's doing marketing or bookkeeping. Well, it's fine to have your spouse doing that for you, but you don't need to have your spouse as a director. Again, it's the main thing, right? Risk and liability is what I can tell you. Now that is, it can be an easy fix. However, there is time that requires to be spent to file a director's resignation. And of course, time means money, right? So a resolution to file a director's resignation, you're looking to pay a lawyer to do that, a corporate paralegal, and also to complete paperwork with the government. So just do it right from the beginning, right? Like you need to get it right from the beginning to avoid any other future payments for fixing your corporation.
For sure, for sure. Yes, definitely. And again, I think the removing the spouse is actually, I would think, Karen, to the least expensive fixture of all the different costs for all the different other fixtures if they've made some mistakes, but it is still something that we can do.
We'll give you a break with
that. Luckily, this process in particular does not require, well, I should back up and say, in most situations does not require the government fee, with the exception of if you put a fixed number on the number of directors within your corporation. The reason why it's a little bit less costly to fix this is because you don't have that large government fee to incur as well. Okay, so then moving on to the next pitfall, which is failing to prepare your initial minutes and the corporate minutes for the business. So this is, I would normally say, 9 out of 10 individuals that do their own incorporation, when we talk to them about their shares certificate, their corporate minutes, initial minutes, they have no idea what this is. So preparing and maintaining your corporate minute book is a legal requirement for corporation. It includes documenting and keeping a record of all your important decisions, your resolutions, and transactions that occur in your company. So Karen, what are the main components that need to be included in a minute book?
Okay, so one of the main components that requires to be in a minute book is your certificate of incorporation and your articles of incorporation. Now, I want to mention something very important. Your initial minutes or your corporate minute requires to have initial documents where you appoint shareholders, directors, and officers of the corporation. These documents are not included in your articles of incorporation or your certificate. I want to clarify that the government is not going to provide you with these documents. These documents require to be completed by a corporate paralegal, a lawyer, or an accountant. Why? Because the initial minutes will appoint shareholders. That shareholder information is something we need at the firm, or the accountants we need at the firm, to process your corporate tax return. The corporate tax return is, there are several schedules in that corporate tax return. And the corporate tax return has a schedule called Schedule 50 that provides the Canada Revenue Agency shareholders information, right? So it is required that you have these initial minutes right from the beginning. So now, I will say 8 out of 10 clients that come and incorporated themselves using a separate service or did it themselves do not have those documents. Right?
That's true.
Those 2 left clients are clients that either incorporated with a lawyer or, or use some professional help to do these minutes. So again, it's important to have them. It's also important to know that there will be a fiscal year and including those minutes. And that's another point we're going to discuss a bit further in the webinar. But again, it's extremely crucial to have these documents completed right from the beginning.
Definitely. And yeah, again, that's the main thing. I think a lot of individuals assume that the initial minutes is part of the incorporation that is done with the government, which is not the case. So your articles of incorporation will outline what can be done within the business, how many directors you can have, what type of shares that you can have. You can put all of these there. But then when it comes to who actually are all the directors, or who is a shareholder, who is the voting shareholder, who is the non-voting share, how many shares have been issued, what is the capital value for each of these shares that have been issued. These are all documented, and that is something that is, again, typically processed with a paralegal, corporate paralegal like yourself, Karen, or with a lawyer. We've set that up. So it really is important because, yes, you can't file a tax return without having this information, because then that has to be submitted over to the Canada Revenue Agency.
Now,
Okay,
Rachel,
so
one
go ahead.
thing I guess I almost forgot to mention here is that you have a bit more experience with what happens when you're looking for a loan at a bank. But correct me if I'm wrong. I remember many clients, or several clients that have come and asked us for, can I have a copy of my shareholders register? Can I have a
Yes.
copy of my, I'm like, which shareholders register? We did not complete those minutes. You came with
Yeah.
an incorporation from somewhere else, and unfortunately, do not have a shareholders register, right? So
That is
that
correct.
that they may need for some sort of applications at a bank. And correct me if I'm
Yes.
wrong.
Yes, you are correct. It's very common to see within the different financial institutions that they are asking the individual to declare who the shareholders are of the business, and they want to see that. So again, you might just write down, I am the sole shareholder, but they want to, again, going back to that documentation, they want to see that. And that's typically within that shareholder register, as you said, and that shareholder register then has to be reported under your Schedule 50 for your tax return. And then if at any time in the future you were to add additional individual as shares for your business, or remove individuals as shareholders for the business, again, that shareholder register has to be updated, right?
Absolutely.
And then once that is updated, then your Schedule 50 is updated. So they do work hand in hand together. The only difference I would say with the shareholder register versus the Schedule 50 of the tax return is that the shareholder register is prepared from the date of incorporation, okay? And any changes that you've made within your shares within the business are always based on current date. But the Canada Revenue Agency is not aware of, who the shareholders are or these changes until you actually file your tax return. And it's very important as well that this is updated with the Canada Revenue Agency, because when you decide, in your mind, you're saying, okay, I want to issue dividend income to my spouse, but you never added your spouse as a shareholder, and now you want to issue shares. Canada Revenue, they do look to see this Schedule 50. Is this individual that you're dispersing shares to, have they been listed as a shareholder of the company? When were they listed as a shareholder? So this information is very important, because again, if it's not done properly, if it's not updated, if it's not included in your tax return, again, can have a lot of ramifications from tax perspective and tax implications down the road as well.
Thank you very much for giving more
You're
details.
welcome, Karen. So then, yes, so moving on to the 7th step, we're already at number 7. Okay, which is selecting the incorrect fiscal year end. Now, I see this all the time. Karen, I am sure you see it all the time.
Right now.
Too, right? So the fiscal year end refers to the specific date on which a company's financial year ends, okay? It marks the end of the company's accounting period for fiscal reporting and tax purposes. And the fiscal year end is typically chosen by the company and may not necessarily align with the calendar year end. And if you choose an incorrect fiscal year end, it can have several implications for tax planning and reporting, like tax deferrals. It might lead to, higher tax brackets, as well as just incorrect financial reporting. So diving into, Karen, you tell me, right? Everybody thinks, well, I shouldn't say everybody, most people think that the corporate year end must default to a December 31st year end date, because that's what they're familiar with from a personal tax reporting period. So how often do you see these DIY incorporations with an incorrect year? And, what are the things that individuals should take into consideration when selecting a year end?
Rachel, I see this 90% of the times. 90% of the times. I have a client that incorporated on October 1st, and the fiscal year end is December 31st. And the worst is that an individual may come until March to ask us for accounting support and help and bookkeeping. And then I will ask, when is the fiscal year end? Oh, well, I don't know, but I think it's December 31st. Then I say, okay, well, that's fine. We're here to help you. So what is your incorporation date? It's October 1st, 2023. Okay, so if your fiscal year end is December, then December 31st, 2023 should have been your first fiscal year end. Otherwise, you will have to, like some sort of file two different returns, one for December 31st and then another one for another fiscal year end for your corporation. What I'm trying to say here, Rachel, is that you need someone to assist you with this, right? Because a lot of people may not know, but it's not okay to choose a fiscal year end just around the corner, because otherwise you're going to have to, one, pay an accountant to do your corporate tax return earlier than you need. If you have an October incorporation and you have a December 31st, that's just, couple of weeks.
Too close. Yeah.
Why do you want to pay someone for completing a corporate tax return when it's not the time yet? You can extend your fiscal year end up to 52 weeks for HST or 53 weeks for your corporation, right? So if you're incorporating on October and you're filing, December 31st fiscal year, you're not really taking advantage of
that is true.
How long you can actually, go without filing a corporate tax return. That's number one. Number two, and I see this very often, is that sometimes when you open this incorporation and you are required to provide an HST account by the agency that is hiring you or by your client, because you're going to go over $30,000, you don't know what you're doing, and you just want that number and you just want it done and you just need it right away so you can pass it to the agency and be done with it. So you call the Internal Revenue Agency and they ask you all these questions that you may not understand what they are, but there are three very important questions. One will be the effective date of the registration of that HST, which is also falling in the fiscal year end that we're talking. Two, it will be the fiscal year end of that HST account. And number three, it will be the frequency of filing. And this, I normally see with a lot of individuals that come for a consultation, that this is always incorrect. It's always incorrect, the fiscal year end and the extension, and it's always incorrect, the filing frequency. It's always incorrect, not even choosing sometimes the right method of HST filing, right? I mean, I'm talking a bit more accounting here, but what I can tell you is, yes, one of the main things that a client actually, unfortunately, does make a mistake when incorporating is choosing the fiscal year end. Sometimes it doesn't align with the HST, and we want the two of them to be the same, right? It will be very hard to have an October 31st fiscal year end for corporation and then December 31st for HST. We don't want that. Accountants do not like that. It will be hard for you. It will be hard for us. So, yes.
So, and it's very important in terms of what you're saying as well, too, Karen, with the year-end date and really specifying the difference, because there are two year ends that need to be taken into consideration. There's your corporate income tax year end, and then there's the GST HST year end date. When you establish a corporation, you only declare to the Canada Revenue Agency your corporate income tax year end when you actually process your corporate tax return filing. Whereas with the GST HST, you are actually required to declare that year end when you're opening the GST HST account. So you cannot open a GST HST account without having a very firm declared year end date. Now, the goal is to always have the two of these aligned 100%. Now, again, even when individuals are looking at, when they're starting up their corporation, and as you use the example of they incorporated in October and they default to December, they may have really defaulted to December because, again, as you said, they call Canada Revenue Agency and they just give them the default December, and not realizing, wait a minute, December is not the best option. We want to take advantage of having that full 52, that 12-month time frame for
Right.
your tax year for the filing for the corporation, as well as for the GST, HST. Now, you can do it from October to December. You can. We're not saying that you can't. The only thing is that we have to look at it from a cost perspective for the individuals, right? If you operated your business for 1 month, 3 months, 12 months, if you made 5,000, 10,000, 100,000, it's the same process to file the tax return in its entirety. So from a cost perspective, it is kind of costing a little bit more, in terms of a value to be doing a full tax return for 3 months versus taking advantage of extending your year end to that 12-month time frame. So you have that 12-month time frame to do that full tax year end. Because again, I say it's very similar to that because most people think, again, oh, well, I've only worked, for 1/4 of the year. My accounting fees is 1/4 of the year. That's not the case, okay? So it's the same as an individual, right? If you worked, 1 month or 12 months of the year, it's the same process you have to go through to finalize your personal tax return. So it's more of a matter of us wanting to select what is in the best interest for you. However, though, Karen, it is very important that we do note that there are very specific type of business professions or business activity where it is actually advisable, regardless of
You're right.
whatever we'd like to capitalize on having a December 31st year-end date.
100%.
So for example, it would include a lot of professional services, like for example, a real estate, where the brokerage companies typically give the corporation a T4A, where they're declaring the income from January to December. So for that purpose, we say, look, this type of professional corporation, it is in your best interest to have a December year-end date.
Absolutely.
Or if you're having the company, it's a holding company, it's been converted to a holding company, or you're using that company specifically for investment purposes, then again, you really want it to align with the calendar year end, because that's when you tend to get all of your brokerage and your investment statements, et cetera, on that calendar. So there are those few situations where it is better to have a December year end date. But again, that's what we're here for. We're here to be able to understand your situation, understand your type of business, and really ensure that, we are helping to select the appropriate year-end date for the business. So definitely something that, 9 out of 10 individuals that have incorporated on their own, we've seen some issues with that. And again, it can be fixed. Everything can always be fixed. But it's just a matter that now we're talking about extra time to, make those changes for your business.
Absolutely.
Okay.
Thanks so much for mentioning that. You're right. I mean, those specific cases, those special cases are something that we needed to mention, and it's required to consider, real estate agents, normally mortgage agents as well.
Yep. Definitely. Okay. So then, since we're talking about why, we're so wise and everybody should seek in professionals like us, the next point, of course, is incorporating without professional advice. So that's what I like to call that, those individuals that prefer the DIY incorporation options. So if you decide to incorporate on your own, the decision can have significant legal and tax implications, okay? Both short-term as well as long-term. And that's why it really is crucial to consult a professional who can help you avoid costly mistakes so that you can save a lot of money in the long term. So when we look at those main points that individuals have to consider, besides, do I want to seek a professional? Do I want to do a DIY? Karen, what do they need to take into consideration?
I mean, to be honest, I just keep thinking that, yeah, I mean, I can definitely give you advice on what you need to consider. You need to consider who's going to be the director, who's going to be your shareholder, what are voting shares, what are non-voting shares, where do I see myself in the next 6-7 months, in a year? Like, what am I doing with the corporation? Am I going for a fiscal year end, December 31st? Should I extend, right? At the point when you're doing all this and trying to figure out if federal versus provincial, name versus not, why don't you just pay a professional? Our incorporation is only $795. And I can tell you, Rachel, the majority of that time is back and forth with the clients and government costs, right? So
Mhm.
you will find the incorporations at CPA for IT for as cheap as you can find them in a DIY. And I'm not going to say any websites. I'm not going to mention. But those incorporations that are coming to you referred by a bank may actually be incorporations where you next, and click
Yep.
next. And it's
Yep.
a DIY incorporation. Yes, it may
Yes.
be $350, but I love saying this. You get what you paid for. Okay.
Indeed.
So
Yeah.
advice I can tell people when they're really choosing to, go ahead, and I'm going to save myself a couple $100 to just incorporate is who's going to be your director? Who is going to be your shareholder? Do you know the differences between common shares and preferred shares, or special shares and common shares, voting shares, non-voting? Do you know the restrictions? Do you know the conditions, right?
Mhm.
The fiscal year end. Do you understand what a fiscal year end will be like? Do you understand what the filing frequency of that HST will be like? Do you know the difference between long method of accounting versus quick method of accounting? So, I mean, I can continue, but these are the main that I normally will check on if I need to incorporate ASAP, right? And I don't have time for a professional to do it, even though it only takes us.
Definitely. 100%. And, I always like to be very clear to clients. Look, at the end of the day, anybody can set up a corporation. You can, they can, a lawyer can, a paralegal can, anybody can set up a corporation. From a legal standpoint, the corporation is a valid corporation. It might be structured wrong. It might have a lot of things wrong in it, but it's still a very valid, and I should back up when I use the word wrong, because I should say incorrectly or not properly structured, catered to the individual, right? But legally, it's still very much a legal corporation, that exists. But it's just a matter that, even sometimes, people say, well, don't I have to go to a lawyer to do an incorporation? I said, you don't have to go to a lawyer. You can, or you can go to a paralegal. I think, sometimes individuals ask, why do we do incorporations? And the reason why is because, look, again, as I said, anybody can set up a corporation. Legally, it will be correct. When we structure a corporation for our clients, we are looking at the corporation structure to be able to facilitate for tax benefits. You might go to a lawyer who they will do everything legally correct. Their angle is not necessarily catered to you from a tax perspective, right? To be able to give you strategic tax planning and these things that we're able to help clients with. So that's really the angle that we go. So that's why, again, I really think it is so important that individuals do seek a professional for that, rather than, again, sure, you can do the DIY. It'll be a very costly DIY, right? So, it's really better to think of it from a long-term perspective rather than just a short-term. You're looking to save a couple bucks now when it's really going to cost you quite significantly down the road.
Right. I mean,
Okay.
again, so a lawyer will give you the legal advice. The accountant will give you the accounting perspective of the incorporation. But a DIY incorporation is giving you absolutely nothing. You are on your own. Go ahead.
Yeah.
You may come to us and we may assist you. Right.
Indeed. Definitely. So then moving on to the next point, Karen, which is the impatience with the incorporation process. So, those clients that come in at 3:00 in the afternoon, they say, I need my incorporation done before the end of the day. Now. They really want it kind of last minute, or they're trying to, skip corners.
Happen. I mean,
it is possible. It is possible.
Exactly. If the right
It really
information
is.
is provided, it could happen.
Yes. So yeah, one of the common mistakes that we do see individuals make with their business is an impatience with the timeline, I should say, of the process. They expect the process to be completed immediately. Now, we can definitely expedite these incorporations and still be able to do that for you correctly. So I guess, Karen, why don't you walk us through a little bit in terms of the timeline or I should say the outline for the incorporation?
I mean, the very first thing that happens with an incorporation is you will purchase the incorporation with our firm, and I will receive a client registration form or an incorporation registration form for the individual that requires the services, right? The main information that someone will need when you're incorporating is the head office of the business, the first and last name of the director, and also it's important to have a strong name that will help us to process a nuanced name search faster. Again, if you're looking to incorporate provincial in Ontario, that can take us only a max of 30 minutes to get the nuance search report. And it would take me around 5 minutes just to analyze if the name is good or not. And what we move forward after with that is we move forward with the articles of certificate of incorporation. And to be honest, Rachel, that may take us only around 2 hours to have completed.
Yeah.
Our incorporation is fast, and we try and avoid having clients to go back and forth. We like information to be clear, and if the information is clear and you require the incorporation in a rush, we can do that for you. Absolutely. What takes a bit longer will be the HST, and I have to say that, or I have to add that that's not really on us. The Canada Revenue Agency requires to update the incorporations once they have been submitted, right? So for them to generate a business number may take them around sometimes 1 business day, sometimes 3 business days. So I normally tell them that an HST will be ready within 2 to 3 business days after the articles of incorporation have been released. So, I mean, we try our very best to have the incorporations completed right away. If someone is in a rush to have an incorporation, they can always call reception and explain they're in a rush, a big rush for an incorporation.
We can definitely expedite.
Exactly, to expedite and accommodate the person.
Another thing that's important to note that, I mean, here's the thing, although, you know, the entirety from start to end of the incorporation might be, you know, anywhere between, let's say, 3 to 5 businesses from the entirety, the actual component of establishing the corporation. So let's say, for example, if you're, you know, working with an agency and you need to finalize the articles of incorporation to, you know, finalize your contract, that component, the nuance, the articles of incorporation to say, hey, a company exists, I can
2
finalize
hours.
my contract. It's within a day.
Max,
it's within a
right.
day.
Yeah.
Yes, there's more time associated to the HST, there's more time associated to the shares and all the minutes and all these things that we need to do. But none of the shares, the minutes, and all these other things, this is what you are required to do and you need to do from a compliance standpoint of the government when it comes to filing your tax return. So, you know, the extra time that we're taken to do that, you know, is not going to impact us being able to provide you what you need to finalize your contract. So again, you know, still something that we can expedite as quickly as possible for the individuals to be able to have that incorporation completed within a matter of a business day.
Correct. Now, let me clarify something, Rachel, very quickly. This information that I'm mentioning about like 2-hour rush is for an Ontario incorporation or provincial incorporation, right? But for a federal incorporation, we're talking
A
about
little different. Yes.
Right. For a federal incorporation, as we mentioned in the prior conversation we had about the name versus number and federal versus provincial, for a federal incorporation, we're required to pre-approve the name. I do not work with names that are not pre-approved. I don't like surprises like that. So I just prefer to pre-approve the name, and the pre-approval may take around 1 to 3 business days.
Okay, perfect. Okay, so I'm just looking at the time. So I know we're almost coming up to the end. So that thankfully we're at the last, you know, pitfall. And then I do see we have some questions coming through, which we're gonna get to right after. So the last one, Karen, is neglecting the ongoing corporate maintenance. So, you know, now that you've incorporated your business, it is extremely crucial to maintain your corporation. Many business owners neglect the corporate maintenance, which can lead to compliance issues and potential penalties. So the corporate maintenance is not only related to the mandatory corporate tax filing, okay, which is the income tax filing, but also includes the annual return filing. So Karen, I know you touched up a little bit more, a little bit earlier on about the annual filing and having the one key account. So, you know, give us a little bit of details of, you know, once a company is set up, what is that maintenance that individuals need to be aware of?
So for a federal corporation, the annual returns required to be filed, as the name says, every year. And you will get reminders either via email or sometimes you may get a letter in the mail, right? So how much does it cost? It costs around $12 to file online. You require an account with Corporations Canada to do that. And for the provincial part, you can do that with a one key account. You require your company key, and you require to have a one key account with Ontario Business Registry. Again, it is important that you maintain all the corporate records. What does the annual return means? It means your company is active and still doing business in the province where you register, and you need to inform this to the jurisdiction where you incorporated. It's a must to be filed by every single corporation in Ontario or federally, right? Other provinces in Canada also require annual returns, and prices will vary, depends on where you're filing, right?
For sure. And I think the main thing with the, the difference between the tax filings and the annual filing, tax filings, everything financial, what you've made, what your expenses are, and then your tax implication. But the annual filing, it's really just to, reconfirm information from your incorporation when you set up. Who are still the directors, who are still, where the still officers, where's the head office of the business? Is it all the same? Because most people think, again, when you incorporate a company, this incorporation is within the business registration, okay, which is separate from the Canada Revenue Agency, which is taxation. So you may be filing your tax returns every year to the government, to the CRA, and you're providing them your new address, your updated, all of this information here. That information, unfortunately, is not being transcribed to the business registry side on a regular basis, right? So that is why it is very important that you are doing these annual filings so that you are just updating this information.
Exactly.
Okay? So these are really, again, the top 10 common pitfalls. Karen, I hope after today's session, we're never going to see these again and everybody's going to become into professional. Okay. So we have a few questions. I'm just going to dive into some of the different questions that we do have. So we have a question here who asks, can you elaborate on steps to remove your spouse and costs, please? So Karen, do you want to give a little bit tidbit on what that steps looks like and what the cost is?
So the cost for, or at least, if you're doing something directly with the government will not charge you for those forms, right? If you're doing it on the federal side, you require a company key to do that, and you need to log into your account. So I don't remember the exact number of the form, but the form is adding your spouse or removing your spouse as a director. And on top of that, you also will require a resolution that requires to be completed by a corporate paralegal, a lawyer, or an accountant. Why? Because you don't want to get into any legal issues, right? Removing a person from the board of directors, it's important. And you always want to have the paper. Here's the paper, here's the signature where the person resigned. I, Karen Perez, resigned from 1, 2, 3, 4, 5, or whatever. We don't want to have a number company, remember. Ontario Inc., and I do not wish to be a director of the corporation. I'm just, making a bit of an example of what the resolution will be like. Now, for that resolution, you are looking to pay an admin fee at our firm. And for Ontario, it's the exact same thing. You're required to file a notice of change with the corporation. And you can file that notice of change with Ontario Business Registry if you have a one-key account. Again, it's free of charge. We do have an admin charge on that as we use a platform. And we also have to complete the admin resolution part.
So that's definitely a service that we can provide to our clients to ensure that it's being done and done properly. Sometimes we also do encourage having a profile search done after, just so that you can see the government record that the individual has been removed. So that's definitely important. The next question here asks, are there any restrictions on who is allowed to be a shareholder of the corporation? I mean, I wouldn't say that there are any restrictions. Outside of the fact that if it is an individual, they do need to be over the age of 18. So very important. You can't have a minor as a shareholder of the corporation. If you are planning to have a corporation be a shareholder of the company, there are certain things that you need to take into consideration. I should say a corporation or even an individual, if they are non-residents of Canada, that is something that we really need to take into consideration, because that can potentially impact, whether or not you're looking to have them as a voting shareholder or a non-voting shareholder, and whether you're still considered to be a CCPC, which is a which allows you to be able to get the small business tax rate here in Ontario of 12.2%. So again, outside of the typical, cannot be under the age of 18, you know, if you have someone that is, again, a non-resident, or you're looking to issue to a corporation, this is something that we would advise that you do seek, have a consult with a professional just to make sure what type of shares that you want to issue from the corporation.
Absolutely.
And then, so I have another question, Karen. This one I'll send to you. Individual asks, can I dissolve my corporation down the line? Which you can.
Yes, you can. Dissolving a corporation doesn't mean that you don't require to file the corporate tax return. You still require to file a corporate tax return up to the date of dissolution, right? So let's say that you have a November 30th fiscal year end, and you filed your November 30th fiscal year end, and you dissolve your corporation on December 15, well, you will be required to file a corporate tax return only for those 2 days or those 15 days, right? You require to file corporate taxes until the dissolution date. But yes, you can dissolve the corporation. Dissolving a corporation is, pretty straightforward. However, this is at least the rule that they have at the government. Most of the tax returns will have to be caught up to the, like the date, right? Like you can have 10 tax returns outstanding and then try to dissolve. They most likely will say no.
Yeah, definitely. And then the last question here, which are the possible liabilities, risks to leave a spouse as a director? So, that's a very important one. So here's the thing. There is some limited liability that we say that is extended to a director of a corporation. And that limited liability can include, from a tax obligation standpoint, there's different, liabilities which you can experience through a corporation. But the most important one I like to talk about is from a CRA perspective, if there's any money owing to CRA. Okay, if you are including both yourself as well as your spouse as a director of the company, you're putting 100% of your personal assets, making all of that liable. So for example, if you haven't filed your tax returns to the corporation, CRA can go after the directors of the company. So if we're talking about, both you as well as your spouse, CRA can come after your assets as well as that spouse's assets. So there is under no circumstance have we ever seen any benefit in having your spouse as a director of the company. The only time under certain circumstances where individuals may want to include their spouse as a director, and it really depends, and that's something that we say, take it offline and have a discussion with us, is that, let's say, for example, if your spouse also wants to be self-employed and also wants to be doing some, having some income coming through the corporation. So both of you having two streams of revenue through the corporation. And it might be a situation where, whomever your spouse's end client is wants to see that person as a director of the corporation. I mean, still, again, not something that we advise, but the risks outweigh any benefit, and which there are no benefits, to be quite honest with you. So that's why if you do have a spouse as a director of the corporation, we strongly advise you to come in, have a discussion with us so we can really see why you intended to have that individual as a director, because we want to make sure that we are removing any liability as much as possible.
Right. Like if the person is going to come and say, oh, well, I want to have my spouse as a director because my spouse is going to provide me bookkeeping services. No, we just went through that.
No.
Same
yes. No.
That's not a reason.
Yeah. Now, I did have one last question that came through from Amra from YouTube. However, I will admit I don't clearly understand the question. Karen, let me see if I can get you to help me here. It says, if anyone have personal income and also have corporation, but do not have net income, all in expenses, what to do for save personal assets? I don't think I clearly understand that question. What I would say is, Amar, if you are on still on the chat, why don't you reach out to us at our email contact@cpa4it.ca and send us an email, and maybe you can explain a little bit more, because I do apologize. I really wasn't able to understand what your question was, but I'm definitely looking to be able to assist you. So if you can send that email off to us, that would be great. Okay. So Karen, so I think go ahead. Oh, you figured it out?
Very quickly something. I think that she's trying to mention that So she has personal income, but no income in the corporation, only expenses.
No, it says
What
do
do we-
not have net income, all in expenses.
So it looks like it's only expenses, what the
What
person.
to do for save personal assets. Not
Yeah,
too sure, to be
maybe
quite honest with you.
Maybe a question that can be emailed to.
Yes. Yes, if you could, we definitely want to be able to clearly understand what your question is and be able to help you with that.
Or the
Okay.
person can book an appointment to.
That too, exactly. That's what we're here for. Okay. All right. Well, Karen, thank you so very much. I'd like to thank everybody who has joined us today. If there are no other questions, Karen, it's always definitely a pleasure. It's always great to have our corporate paralegal who knows these things, the ins and the outs, to be able to help us. And again, if anybody is interested in having an initial consultation with us, you can please feel free to go to our website and we can definitely help you. And as I said, having a consultation, it's free. It doesn't hurt for us to at least be able to give you some form of guidance so that you're not going to fall within these different pitfalls. Okay. All right.
And
thank you so very much, Karen.
Great job, ladies. I really appreciate you doing this.
Thank
so
you,
thank you, guys. You
Andrew.
knocked it out of the park, as I knew you would. So
Thank you. Thank you.
thanks everyone for joining us. And
All
we'll
right.
see you,
Cheers.
either
Bye-bye.
Friday for Friday AI or in a couple weeks for our next webinar. Thanks and bye for now.
Thank you.